Hey, good afternoon. Neil here with end of day, end of week. Getting the year kicked off though. So we started. Yeah, we got January kicked off with the year open. Let's get it. 59.49. Probably just easy to remember. 59.50 ish in the ES, and that's where we're at right now. So last time we were together, I was looking a little lower. I'm looking down here for this target that I've got painted on screen here at 58.40. We didn't get there. We got down to about 58.70. So missed it by a little. Now what I've done is, as you can see on screen, I've taken two different measurements. One from the all-time high to the low of the break, and then the other is from the high when we were together last down to the bottom of the break. And it looks to me like I've got some overlap maybe call it confluence or overlap in fib levels here at about 60-30. So I don't want to be picky like to the tick or anything like that, but I will say this. Much above 60-30, and I really don't know what's going on. It would be more than half recovery of the entire move. It would be, I think, to me it looks more important that it would be more than a 618 of this current break, and it would be back above some of the trailing averages that so far right now have this thing kind of trapped. So we did move lower nicely. We did get close but not quite to target. I still do like that target, absolutely. To me, it's a matter of when, not if. I mean, that does trade out, I believe, but I just obviously don't know when. And so in order to keep us on somewhat of a more, if you will, direct path, we would be just up ever so slightly, a little bit more into, let's use a number. I don't want to be so picky and say it's 60-30, but I mean, it is 60-30. So let's go like 60-40. Right, just an inch above, like, acceptable, and then that's too much. Otherwise, you get just a little bit more up, and then when and if this thing is rolling back over down, we're looking 58.40 target ES. Now, markers to keep in mind, remember, and use in assistance with this that we're looking at. I would say 59.25 SPX. Big over under, back below that, it's heading down. Right now it's above that though, 59.40 SPX right now, but 59.25 is a big number. I think, back below that, and it's like, this is getting a little soft. And then also use a number of 21,300 in the NASDAQ, right? So I don't mind if it's a smidge below. Like, for instance, in the room today, we were trying to buy them at like 240. It's not a big deal if it's just an inch right there. But 21,300 NASDAQ, 59.25 SPX, and those are below where we are right now. So the other thing is not much more up before it needs to get trapped and sent back down, or the uptake is too much and it's getting away from me. And that number I've said above us to catch us with, and allowing for just a little bit more up, is I'm going to use 60.40 in the ES. I mean, that's what I know, right? I mean, from here up a little bit more, it's got a little bit of tolerance, not much. And then you got a target on the bottom down there. And then where do you really feel like, oh boy, I mean, thing's kind of heading down? Well, below 59.25 SPX and 21,300 in the NASDAQ. That's what I got. Good trade, and look forward to just being with you again here at the next update then. Till then, good trading.
Without simpler trading, I could not have financial independence.
This is one of the best investments I ever made in my life.
It's helping me find consistency. It's one of the things that won me